Hi, everyone, and thank you so much for joining our expert session, Open Banking Your AI Launchpad. And I'm very excited about this session, and we'll get to it just shortly. I want to mention a couple of things. First of all, do not forget to register for your OpenFinity Days, which is in partnership with API Days and is occurring this May 14th and 15th. If you are an OpenFinity member, you can, when you register on the OpenFinity Days site, don't forget to enter your discount code. You'll get 10% off the entry to OpenFinity Days just for being an OpenFinity member. Okay. With that, I would like to remind you that you can ask questions to the expert speaker. Just put the question into the text box below. If you're watching it from the OpenFinity platform, put a text, put your message in the text box, click submit, and that'll go directly to our Slack channel where we will pick up the questions. If you are on YouTube or LinkedIn, you can put the comment in the comment section, or you can just go to the OpenFinity events channel and provide a question. So multiple ways for you to participate. This webinar is for your education, so please ask your questions. With that, I am going to add on to the stage our distinguished guest, and I will exit. So I am going to turn it over to, hold on one second if I can get my, there we go. I'm going to add Richard onto the stage, and there we go, Amjad onto the stage.
Thank you, Laura.
And turn it over to you. So I'm going to exit the stage, and
Give me a moment, I'll get the slides.
I added the slides for you, sorry.
Yeah, so hello everyone. I'm 𝗲𝗲𝗻𝗄. I'm a technical lead at WSO2, and I'm mainly focusing on BFSI solutions. So I have been working with open banking for about 7 years now at WSO2. And we have enabled multiple banks across the world in different regions to be compliant with their open banking solutions. And in this journey, Richard has been a consultant who has worked with us to reach out to different banks and work with different banks to get them compliant. And he has a lot of experience with dealing with these banks and getting them compliant for open banking across different regions. Can you go to the next slide? Yeah, so I'll give a quick outline of the session that we are going to do today. So initially, I'll be discussing a little bit about the US open banking regulation. And then we'll focus on open banking as an AI enabler, which will be conducted by Richard. And then we'll switch back to understanding the core components of open banking and what open banking deployment or compliant deployment entails. And we'll go into some specifics regarding open APIs, security standards, and consent management, and link them back to AI and discuss how these capabilities can empower AI use cases as well. Then we'll discuss a few AI use cases for open banking, and finally discuss open banking and AI with WSO2. So speaking about the global open banking initiatives that has happened, so open banking actually started about 7 to 8 years ago with the introduction of PSD2 in the European region and the UK region, which were together back then. And with this, there was now open banking has spread across the world. So these numbers that you see are in order of the release of these specifications. And now the latest specification we see is in the US with the CFPB open banking rule. So speaking about the US open finance regulation, open banking is nothing new to the US, because the US has been using industry-led open banking standard, FDX, for several years now. And it's a matured specification that uses modern authentication standards like rich authorization. And only now we see there is talk about making it mandatory with the CFPB rule, but open banking is actually nothing new to the US. So for those of you who don't know, I'll give a brief introduction into what open banking is. So what open banking does is exposing capabilities, data, payment APIs, things like that, in a standardized way, so that every bank will have this open banking platform and these APIs exposed, which then can be used by third-party API consumer applications across banks. And customers can use these fintechs and these API consumer applications to perform various innovative actions that will be enabled by these consumer applications. So it will vary from data sharing to payment APIs, etc. We'll go into them in future slides. So initially, we'll discuss open banking as an AI enabler. Over to you, Richard. Right.
Thanks, Amjad. Can you go to the next slide, please, mate? Thank you. So, yeah, open banking, it's a good food source for AI as part of, obviously, a balanced diet. Don't go overfeeding it. But, you know, regulation might force participation in open banking. It might not. But I'm trying to make the case here that regardless, go ahead, embrace it. You know, any AI platform or even analytics platform or service is only as useful as the interfaces and data they have access to. And open banking provides the interfaces to customers, to their services in real time with access to recent data, whether interactively when the customer's doing and actually using those services, or even in the background, just by mention of consent. So, I mean, open banking is a great feed for AI, high in calorie, just what you want. Next slide, please, Amjad. So, you know, getting data into AI by ways of open banking, consuming open banking is probably a no-brainer. And ultimately, you can use it to personalize experiences at scale, do real-time risk and affordability, you know, robo-advisory with financial context, fast and frictionless onboarding. I mean, who wants to keep entering their name and their address? Yeah, and fraud detection with Know Your Customer. Yeah, basically richer insights, faster decisions, and relevant experiences powered by AI services fed using customer data and customers' data in real time. Next one, please, Amjad. Thank you. This is always the everybody wants to consume, but who wants to provide? I mean, you know, without being mandated, it might seem a bit of a leap of faith. There are benefits to providing data as well. On one hand, customer retention. So a few of my clients have often had queries as to why their customer, you know, a customer can't access their bank account in Xero, and it's not the bank's fault; it's Xero's fault. But you know, it does make customers potentially walk away if they can't all of a sudden get their account data into their favorite accounts package to figure out, you know, point in time finances. But also, if a customer is going to different parties and using your organization's data to go and apply for services or even just to browse services, you can see who they're flirting with. You can get an idea of what that customer is actually interested in and maybe what you're not offering them. There's also the bank as a service revenue model. So monetizing APIs by offering bank capabilities to third parties. That can be anything through actual offering things like loans or account opening and that sort of thing, or even just minor component things that you might do well. So you might do fraud in KYC quite well. You can maybe give that to other organizations as well for some money. So actually open banking, even providing open banking, can be a real enabler for growth. Thank you, Amjad. I'll hand back to you, mate.
With that, we'll quickly go through what are the core components that makes up open banking deployment. So generally, if you take technical capabilities that needs to be there to expose or be compliant with open banking regulation, they mainly includes these standard-based APIs that the regulation or the standard will provide, premium APIs and monetization. That's a level the bank can go to monetize extra APIs, and that's not covered by the regulation or sometimes covered by the regulation. So third-party onboarding and management is the signing and the onboarding of a third party or a consumer application onto your platform, and the rules and regulations generally that you need to follow when onboarding a third party is generally provided by a standard. Developer portal and API marketplace for APIs, banking systems integration, because this open banking layer needs to be connected to a core banking system, and data analytics, both for internal review as well as sometimes you need to provide this analytical data to regulatory bodies for audit. Integrations for fraud detection, data security, and consent management, which is a very important part, which we'll be discussing in a few slides, and consumer authentication. Let's go through a simple open banking flow. So this is simplified to a very low level to give a basic idea of what open banking flow is like. So initially, a user goes and registers with a third-party application and says, hey, I need to make a payment, or I need to do a transaction, access my data, and vice versa. So then what this third-party application do is this third-party application goes and initiates an authorization with the bank. So this component that this third-party application goes and initiates this authorization with is a IAM component, because these authorizations always happen using O2, OIDC, 𝗙𝗡 based endpoints. And for that, there needs to be a IAM product that's being involved. And then this IAM product will keep on publishing events into the analytics solution that you have. So that's another component that you need. You need an analytics solution. And then what happens is the user gets redirected into this flow via browser or mobile phone, etc., to authorize and provide consent. So initially the user authenticates themselves, and then the user gets to provide the consent. So if it's a transaction, the user gets to see, hey, this application is trying to do this transaction to this beneficiary, do you approve it? Or if it's a data sharing arrangement, this third-party application is trying to access this data for this amount of time, whether you approve it. And then if the user approves, this third-party application gets a token. And this token can then be used to access this API definition provided by the regulation. So that's another component that you need to have, which is an API management solution, where this API definition or this open API definition will be given by the regulation or the specification, which you can host it using API management solution. And there are other components to it, like you have to do rate limiting, you have to do API security, payload integrity validation, certificate validations, etc. But yeah, that will be done by a APIM solution. And then finally, to cater this open banking API, you need data. So to get the data, you need to do an integration with your core banking system so that you can get data from the core banking system and expose it as these APIs. Yeah, so let's focus on these core capabilities. So as I mentioned, we need an API management solution, we need an IAM solution, we need an integration solution, and an analytics solution. So an IAM solution needs to have O2 OIDC and financial grade API level security, dynamic client registration for regions where dynamic client registration is used, but some regions use manual client registration that is under API management. Strong customer authentication, and consent management is one of the main components of open banking, because everything in open banking works on customer consent. So we'll do a deep dive on that as well. And finally, mutual TLS, which is where the client as well as the server exchanges certificates to verify themselves. And then there needs to be integration solution, API management, as I discussed before. We'll have the developer portal for manual onboarding of clients, API security, rate limiting, and open API support. And analytics component will be useful to generate internal analytics, as well as analytics you need to report to a regulator. That will include availability analytics, performance analytics, etc. So we'll quickly do a deep dive on 3 of these components and how it helps empower AI. First, we'll take open APIs. So an open banking specification provides an open API definition, as I mentioned, that the bank needs to host and expose. So this is a contract between, so it will be a central contract that's open API definition that's issued by the regulator for the specification, so that both the bank will expose as well as the third party can access. It's like a central contract. And these APIs usually contains 2 types of APIs, account data APIs and payment APIs. And some specifications go towards confirmation of funds APIs as well, but in general, these are the 2 types of APIs that are supported. And these APIs covers a wide scope of use cases, and hence it can be really useful for AI use cases as well, because these APIs can cover a lot of data sharing requirements as well as transaction requirements as it is. And banks have the ability to stick with these given APIs or innovate, expand, and monetize more APIs and go in that path. Focusing on security standards, generally in open banking, security is one of the most important parts. So in every region, there are tight security measures that are taken at API level and API security level to ensure that only intended parties can access these APIs. So different open banking specifications around the world are not going to come up with their own specification for this. So most of the specifications go with these existing established standards. So some specifications, so this diagram you see on the left side are 3 different specifications, but it stacks one on top of the other. So if you take a specification like Berlin or the next-gen PSD2 open banking specification, it only uses OAuth2 as the security standard. It references other specifications like the certificate bound token specification and stuff like that, but the general security standard is OAuth2. If you take regions like Australia or even US FDX, it uses the financial grade API, which is the highest level of the API security standards that's available at the moment. So OpenID Connect is on top of is extending OAuth2. Then again, financial grade API is extending OpenID Connect. So I'll explain a basic flow using these standards. So this is also called OAuth code flow. Across these standards, this is called OAuth code flow or code ID token flow based on the level of specification. So generally it will involve a customer or user coming in and telling the API consumer that I need to do this action. Then the API consumer decides, okay, I need to get these permissions, or I need to get a token that lets me do these things with the bank and access these APIs or do a payment. Then this API consumer reaches out to the bank and sends an authorized request and initiates a consent. Then redirects the user to provide second factor authentication and select the bank account that they need to provide this access for and authorize or deny. So if they authorize, this API consumer gets a token. So it's in fact they get an OAuth code, which they then exchange for a token. And this token can be then used to access these APIs, get this user's information, perform transactions on behalf of this user, etc. So the importance of 𝗙𝗙 for AI. So 𝗙𝗙, the 𝗙𝗙 OAuth code flow, as I mentioned before, can be used to protect any API that works with user data to a very high level. So this 𝗙𝗙 OAuth code flow has multiple levels of verifications and rules that needs to be followed and validation that needs to be done, so that there are multiple levels of security to verify or to ensure a certain level of protection. So for example, certificate level stuff and certificate level validations and certificate bound access token support and things like that. I'm not going into much details. So these standards not only verifies the client, but also restricts. So not only verifying whether is a real consumer, they also verify that whether this consumer is allowed to do this and for how long is this consumer allowed to do this. And when exposing financial APIs for AI use cases, it's vital to use these advanced standards like 𝗙𝗙 to ensure security. And one other flow I wanted to quickly touch upon is this client-initiated back-channel authentication flow. This is a fully decoupled authentication flow, which is used in open banking across different regions, where, for example, let's say Richard goes to a shop and tries to buy something. And you get your stuff, go to the kiosk, and you just select your bank and provide your username or something like that, identification. Then this kiosk can initiate a transaction with the banking APIs. And then the bank will send a push notification to Richard's phone, which then can be used to approve or deny this payment. So from the user side, you just go to the kiosk, select your bank, give a username, and then you get a push notification to a mobile app, a bank mobile app, which can be used to approve or deny this payment. So you won't enter any payment or extremely sensitive details into the kiosk. You don't get any anything that can be used against you or can be used to steal from you. So you just enter your bank, what's your bank, and your account user ID or the identification, which can then use to be triggered this fully decoupled authentication flow. So this authentication flow is really useful in agentic AI use cases, which I'll cover at the end of the slides with an example, because this enables the AI agent to go and do activities on behalf of a user. And when there's a need to get an approval, there can be a push notification triggered to get the user's approval. Okay, the final component we are going through is consent management. So consent management is one of the most important aspects in open banking. Since customer financial data is exposed in open banking throughout the regions, granular consent management is being used. So there are two types of consent management that we see in open banking. The first type of consent management is long living consents. So these are generally data sharing consents or long living payment consents like standing orders, which will go for several months. And the other type of consent is one-off consents, where generally it's used for single payments, where you provide consent for a single payment. You see the payment beneficiary details, your account details, and the amount you need to pay, and such information, and approve the payment. And once the payment is processed, that consent is void. So if you take a general open banking consent, it will include things like permissions associated with the consent that the user will get to select or approve, bank account numbers that are associated with this consent or the consent is provided for, consent expiration date, since every consent in open banking has an expiration. This expiration date is there for long living consents that we discussed, and users associated with the consent. These for joint account scenarios, corporate account scenarios, where there are multiple users who gets to use a consent, or in some regions we see a single joint account user can initiate a consent and use it, but other joint account holders can revoke it. So other considerations for consent management, I'm not going to go deep into them. We have consent revocation, where the consumer application can revoke a consent by calling an API. Consent amendment, where different details about a consent can be amended after the consent is provided. These again for long living consents. Then consent self-care, this is generally a portal where users can log in and revoke their existing long living consents, view their past consents, etc. Then consent administration, where bank administration can log in and revoke consents and do manipulations, etc. Yeah. So how this is useful for AI? So with consent management to this granular level, the user will be fully in control of the data exposed and the operations allowed to be performed on their behalf. With providing data access to generative AI models and AI agents, etc., controlling the access is paramount. This also applies to payment endpoints in order to control transactions that can be conducted by an AI agent. Consent management can act as an efficient guardrail for AI use cases as well, because as you all might know, with AI use cases, still it's not 100% trustworthy, if I think of word for it. So it's important to have guardrails, especially for AI agents, so that it cannot misuse data or other payment APIs. So this concern management is a really good solution for it. Yeah. Now let's come into the AI side of it and discuss a few use cases and how AI works with open banking. So generally, as Richard mentioned before, open banking helps break down siloed data in banks and provide access to a richer data ecosystem through standardized and secure APIs, which are fundamental for AIs to function. Also, robust API security in open banking extends to AI integrations, safeguarding the sensitive customer data, as I mentioned before, with concern management and other security standards that are available already in open banking. They can be used to secure this sensitive information in AI integrations as well. And finally, concern management can be used to manage the customer consent on who gets to use the customer data for what and for how long. So let's go through a few fintech AI use cases that can be enabled with open banking APIs. So the first, I'm not going to go deep into this. I'll quickly go through them. First one is dynamic credit scoring. To do dynamic credit scoring using AI, non-traditional data like utility bill payments, etc., can be used. AI can generate real-time risk profiles and especially useful for underbanked and thin-file customers. AI-powered virtual assistants, which is a thing that will come up in the future. So these are what's called AI agents, and open banking APIs can really power these virtual assistants that can help users, like smart chatbots that can access user banking data APIs and do stuff like summarize spending, notifying of unusual activity, and also execute simple actions like bill payments. Also, subscription management and optimization, where AI can go through your transaction data and detect recurring subscriptions, suggest cancellations or lower cost alternatives, help users reduce subscription leakage that they are not aware of. Also, it can be used to provide smart offers and merchant linking. AI detects frequently visited merchants or categories, sends real-time cashback or discount offers, which is powered by the enriched transaction data from open banking. Yeah, next, we'll quickly look into a little bit about these AI-powered virtual assistants and AI agents. So generative AI or AI agents will play a large role in the future of financial services. These agents will work primarily on APIs, with the use of protocols like MCP, which is being used now. Having the capability to work with external AI agents or have your own AI agents will help banks to reach out to a wider audience and be more competitive. Also, since AI agents are, as I mentioned before, since AI agents are not 100% reliable, it is important to set guardrails to them on what can be done and how it should be done. So the robust security frameworks established for open banking APIs we discussed before, mainly concern management, can be used to achieve this level of protection. I'll quickly go through a sample agentic AI payment use case. So if you can remember, a few slides back, I discussed this 𝗙𝗏 flow, where a user can provide authentication in a fully decoupled manner. So let's take a requirement. For example, a user needs to make reservations to a bunch of hotels and flights based on some information provided. So imagine this user provides this requirement to an AI agent and say, hey, do these reservations for me. And this AI agent can go and reach out or send requests to these TPPs, or in the future, this AI agent itself can be a third-party provider or a API consumer application that initiates this authorization with a bank. And once this authorization is initialized using this 𝗙𝗏 standard, then the user will be informed when this payment is about to be made, whether the user approves of this payment or not. And based on the confirmation, that those payments can be processed. So from the user side, you just give this requirement to the AI agent, and once it's trying to do something critical, it will notify you, the bank will notify you and ask you to approve it. So this will also enable multiple other use cases like bill payments or some other data sharing scenarios as well. So yeah, that's one of the use cases of this. Yeah, so finally, I'll quickly cover what WSO2 does in this space with regard to open banking and AI. So WSO2 provides enterprise level products for all of the following categories and are 100% open source. We provide API management product, identity and access management product, an integration product, both on-premise as well as in a SaaS option. We also provide open finance compliance, including FDA spec compliance. Also, we can help power all of the above discussed scenarios and use cases end-to-end, from AI agents to open banking. And this diagram that I showed, we cover all of these scenarios related to open banking from end-to-end. Yeah, quickly I'll cover the AI part as well, since I'm running out of time a little bit. So WSO2 focuses on AI on two different aspects. We call it AI for code and code for AI. AI for code is about supercharging developers' productivity across the software development lifecycle, because most of our products are developer-focused products. And code for AI is us enabling the building of AI native applications through emerging programming abstractions and building blocks. So, so as I mentioned, we cover with AI for code, we cover we provide tools for developer productivity, starting from coding and development to production and delivery of solutions using our products of API management, IAM, and integration. And in code for AI, we cover use cases from building, connecting, orchestrating, and deploying AI agents to governing and guardrailing Gen AI models via API management, creating and publishing tools from APIs and monetize them. So these where MCP comes in, and also define agent identity and authorization as well. Yeah, that's from our side. We are happy to answer any questions.
All right, everybody, you can submit your questions into the text box, as I mentioned before, on our OpenFinity platform, or if you're watching from YouTube or LinkedIn, feel free to put it in the chat and we'll get it through there. We have a short time, so I only have to be able to accept 1 or 2 questions, but one of the questions I wonder, and I'm sure everybody else here in North America, you've implemented open banking solutions around the world, okay? What is the most difficult aspect of implementing an open banking solution? What would you say is the number one thing that, takes the most time?
Richard, do you want to start?
I'd go with internal governance, to be honest, mate. So banks are generally very heavily regulated entities, and they obviously want to adhere to regulation, but it's generally because the regulatory need comes from the compliance department, and generally they want to deal with that in isolation. It can be very difficult to steer that organisation to doing something more beneficial to them than just merely adhering to the regulation, take advantage of it. And it's going through the governance of that. So, and if we go back way in time, and Amjad might remember this, back in 2017, we were dealing with a client, and it was, they want open banking, they want to adhere to regulation, great. But we also found value that if we go about this in the right way, we could also kickstart their digital transformation. And it was trying to get that organisation to see, one, try and benefit from open banking, not just adhere to regulation. And that digital transformation was just more than a website and an app. And largely that's where the WSO2 open banking platform was born. It was born out of literally that requirement of providing, yes, it provides regulatory requirements. It's cost effective in doing that, but also it's a great way of Launchpad in your digital transformation as well. And it's largely grown from there. Amjad, do you want to add anything to that, mate?
Yeah. So another thing I wanted to highlight is that some people think that open banking is a one-time thing. You deploy it and you are done. But what most people don't understand is that open banking is a journey where there are multiple updates that specifications release, and you have to always keep track of them and always make changes to a deployment and keep up with it. So that's one of the most important parts that some people won't think about. But yeah, open banking is always a journey.
I would tend to agree from what you put it correctly, Richard. It's a governance issue across all your lines of business. One, you're meeting regulation, but the next you have to try to provide a business justification besides just meeting regulation. How can you monetize off of it and get everybody? And then you've got your risks team that you have to convince and get all those check marks.
RFP processes, all the rest of it. Yeah.
So it's a long run to get to your first deployment of your open banking, and then as Anjan said, it's constantly evolving, especially as more and more people realize the benefits. They want to open more and more, and this brings me to an AI question. You guys have implemented around the world, but follow on from that risk and compliance standpoint, how are you seeing financial institutions adopting AI and AI agents? Are they adopting them more on the back office and releasing? How are they, or are they actually going, pushing forward and doing some prototyping with that front office type AI agent that you shared?
I'll cover this one first. Generally, you end up with organisations in 2 camps. Ones that will want to be bleeding edge to a point, willing to test and deploy AI technologies. And that can be things like robo-advisory, or for them to build out their customer experience, their customer experiences. It could be tools that help back end. So in terms of help agents deal with calls or queries, help them do sales of products and advisory of products, that sort of thing. And then you've got those that are very, very, very timid around it. And it comes to a point whereby those that are timid, they're still embracing AI technology to a point, but it's probably more akin to an accountant using a calculator rather than anything else. So it's a tool just to enable the person to do something. And that's more, as I say, where it comes to customer interactions. What we have seen over the last almost decade, probably 6-7 years, that AI in terms of machine learning has been used quite heavily in terms of trying to get insights out of just fields and fields and fields of data to try and help or try and get banks to help build out product sets which are most relevant to their customers, or to hedge exposures or risk or that sort of thing, and to also do sort of like the no determinations. So no yes determinations per se, but no determinations around stop this because it looks like fraud patterns, that sort of activity. So yeah, you see it, and I say you've got some organisations quite timid, but they're still using it. Some that are very pushing forward, they want to use robo-advisory, that sort of thing. When it comes to the regulation, I'm based in the UK, so I can talk around the UK FCA regulations around this. It's largely principles based, so it very much the do the best for the customer, don't lead them down the wrong path, all that sort of thing. There's no hard and fast rules around deploying it, just that you are 100% responsible for what you've deployed. If it fails, you're on, your neck's on the line. So, and that's very much from a UK regulatory point of view. It's more principle based than it is prescriptive. Amjad, I don't know if you want to add to that.
No, I think you covered that really well. Yeah.
Okay. We did get a couple questions. One was, what agent use cases are most getting the most traction, which in open finance, I think you covered that pretty well on that response, Richard. But another one, and I think we might have to take this offline for this one, but it's a valid question. When you're putting in open banking solutions, how's the pricing model? And it could be pricing model from a a third party consuming a bank's APIs, if they actually allow banks in your region to charge for API access. What's the pricing model?
I can answer this generally. I think if you want any specific pricing, go to WSO2 first, obviously. But look, when it comes to purchasing an open banking product to provide open banking facility, for example, whether that's consumption or whether that's providing data, there's many different commercial models as you can think of. So some of them are more SaaS based on maybe users or transaction counts, and then you've got your typical, your almost what we used to call the on-prem billing model, which is you bought a whole bunch of servers and licensing and support and all the rest of it, and you ran it year on year on year on year. I think ultimately what would work best for most organisations, I think these days, let's face it, it's probably more of a SaaS model, and then trying to link that to the cost of consumption is the cost of business type thing. But yeah, there's probably still offerings out there which do use that old on-prem style. You buy some boxes, some tins, some licenses, some subscriptions for updates and that, and some support and people to go and deal with it. In terms of the other side of that, so clawing back money from your investment, I suppose. Yeah, I mean, you could do monetized APIs, and that could be as blunt as, I've created a great fraud KYC engine. You want to run something through it, you pay me per transaction or per 100 transactions or 1,000 transactions. Or I will provide everybody 10 calls a day, but if you want the premium package of 1 million calls a day, you pay this. You might come to some sort of agreements with some third parties where you do a revenue sharing based on data for them pushing their product out. You may even expand your offerings to provide those sort of bank as a service type offerings. But generally, when it comes to the regulatory compliance part of this, you're largely doing it as a part of your business. So you're joining an ecosphere where, yes, you are taking data, you are pushing data. You will probably find there's various benefits of consuming that data as well as pushing it. And it could be just as simple as, let's say you're a savings and loan company, you have access to one of your customers' account data. You see for the last 47 months, there's been this payment that goes out, which looks like a car payment. And then all of a sudden, that customer's pulled their savings from your organisation and put it in that account. You could probably guess there's a balloon payment coming. You could probably offer them through some sort of personalisation, a refinancing type arrangement. So there's many different ways that you could buy, obviously, open banking and provide it, but also maybe make on it as well. It's it could be optimization.
Quickly to add on to that, if it's about WSO2 open banking product pricing, just reach out to us. We can help with it. Yeah.
So the slides, thank you all. I think we're at our time, and the slides will be available right here in the same place, same URL. If you're watching on the OpenFinity platform, Amjad's contact information and Richard's will be there as well. So thank you so much for joining us today. Thank you, Amjad and Richard, for a great call. Thank you. Bye-bye.
Thank you. Take care, everyone.
Take care. Have a great day.
Bye-bye.